Hey everybody, Jay here. Welcome to video number 2 of the channel. Today's going to be a foundational piece where I'm simply going to reveal my full portfolio to you guys, which I'm excited to do. There won't be a lot of pontification or exposition on the specific stocks and mutual funds that I have in my portfolio. That'll be for future videos. But what I want to do today is simply reveal what I have in my portfolio to give you guys a bit of context as I make decisions moving forward. So here's a quick look. This is from my personal capital account. You can see all in, I've broken $1 million. It's a little anticlimactic because A, I'm on sabbatical. So a large portion of this cash is money that I've set aside to live on until I get my next job, or until my consulting gigs really take off, which they're kind of doing. On a quick side note, starting to gain some traction there, so we'll see. That being said, I'm not including my cash in my overall portfolio value. That being said, the total value is actually $873,000, or $873,209 is what I'm counting as the total value of my portfolio. So without further ado, let's jump into the holdings. In revealing my holdings, I'm going to go from my highest holding down to my lowest. And I have a total of 31 holdings in the portfolio. It's a mixture of stocks, ETFs, and mutual funds. Just a quick overview for you guys. Heading into 2019, my portfolio pretty much consisted of technology stocks and index funds. And 2019, one of the first things I did when I started my mid-career sabbatical was I wanted to get smarter on investing. And so I learned about different ways of investing beyond the simple growth and index fund investing that I was doing. And the two modes of investing that I discovered that I felt like I really needed to add to my portfolio were value and income, i.e. dividend investing, and then buying stocks that are presenting a good value. So you'll see I have added quite a bit of those types of stocks to my portfolio. That being said, the foundation of my portfolio is still tech. From the previous video, if you guys saw it, 37% of my holdings still reside in the technology sector. And I do that intentionally because I still feel like long run, the technology stocks are going to be the foundation of growth. And given that I'm 45 years old right now, I need to be in the market for a while longer before I have a portfolio to the size that I'm going to be able to generate enough passive income that I'll be able to live off of. I need to be in tech and growth stocks in order to achieve my goals. So with that being said, my number one holding is probably my favorite stock, which is Amazon. You can see I have a little over $93,000 with 50 shares, and that is my top holding. My number two holding is another tech stock, actually the first individual stock I ever purchased, and that was Facebook. And I actually want to purchase more Facebook, but right now it's sitting at a clear number two. And I really consider Amazon, Facebook, and then one more tech stock that we're going to get to as the foundation of my portfolio. And I'll review that third one when we get there. It's not very far down the list. Number three, I added a lot of this stock in the spirit of adding a strong dividend company in 2019, and that's Verizon. I really think they're well positioned for 5G. I think that they have the best network in the United States, and I think that that's going to be a strong play moving forward. Not the most exciting play, probably not going to get the most growth out of it, but I really like this Verizon stock. Number four, this is an total international market index fund, the Fidelity Zero International Market Index Fund. One of the few index funds I still hold. And the reason is I don't feel like as an investor that I know the international markets well enough yet to go in and start buying specific companies. So while I am buying a number of specific companies and business in the US, I'm more than comfortable getting my international exposure through this index fund, at least for the time being. My number five holding is also a zero fee or a low fee total bond index fund through Fidelity as well. Again, that was just in the spirit of adding a bit more diversification and income to my portfolio in 2019. Quick little fact, fun fact, I bought these two at the same time, put 50 grand into each one. So it's just kind of interesting to see how the international equities are outpacing the bonds right now. But I've owned each of these two for less than a year. So the fact that I've gotten the returns on them that I have it's not indicative of anything that I'm doing that's wildly intelligent. I think it's more indicative of just the market that we've been in. So we jump to number 6, what I think is one of the most solid foundational stocks anyone can have in their portfolio is Microsoft. And then number 7, we get to what I consider my other foundational stock, along with Amazon and Facebook, and that's Google. And I actually own Goog, G-O-O-G here, about 47 grand worth. And you're going to see, as we get further down the list, I also own about 15 grand worth of G-O-O-G-L, their other ticker symbol. So all in all, Google is actually my number 3 holding, just ahead of Verizon. But because I bought it under 2 different ticker symbols, it shows up a bit more fragmented on my personal capital page. All right, number 8. This is just a simple mutual fund that I've had in one of my 401ks forever. It's one of the last mutual funds that I'm still holding. My plan is to sell out of it, probably going to sell out of it pretty soon, so I can start buying some individual stocks. That being said, I'm not seeing many good values out there right now, so for the time being, I'm fine holding on to BRLIX. Number 9, this is the Invesco's S&P 500 index fund that features their low volatility, high dividend paying companies. So again, that's a nice little income piece I added to my portfolio last year. And then rounding out the top 10 is Realty Income Corp. This is my highest rated REIT in terms of the amount of dollars that I've invested into them. All right, number 11 is LQD. This is just a iShares investment grade corporate bond fund that, again, in the spirit of adding more income to my portfolio, added this last year. Then AT&T, much like Verizon, I like the telco space, and so AT&T comes in at number 12, just below 30,000. J&J felt like this was a really good value in 2019. One of the first value stocks that I purchased, and it's done very well for me, coming in at just a little under 28,000. And then at number 14 is Disney. I don't need to talk about all the goodness of Disney. They're a great company to have in your portfolio. All right, let's go to number 15 on the list. This is a real estate index ETF through Fidelity as well. Then number 16 is the BNDX. It's the Vanguard Total International Bond Index Fund. Gives me some international exposure to the bond market. Then Wells Fargo. This was the first bank that I purchased. You're going to see I own one more bank after Wells Fargo a bit further down the list. I liked Wells Fargo because it represented outstanding value and it was paying a very nice dividend. It still is, over 4%. They were doing well, and in their latest earnings report, they took a bit of a hit. I may actually add more Wells Fargo to my portfolio. I'm still debating, but as of now, I've got a little over 20 grand in Wells Fargo. Then Altria. This was another play that I made for income. Much like Johnson & Johnson, I felt like Altria represented some outstanding value, so I added a nice chunk of them through a couple of different purchases in 2019. Number 19 is Bank of America. They're my other financial holding, my other bank. I want to add JP Morgan to the mix as well. I'm actually going to do a video probably in the very near future about bank stocks, because while a number of them are at their 52-week highs, and so on the surface they don't look like the best value, but they have been purchasing so much of their stock back. They're actually, if you look beyond just sort of the surface, they're sort of like a nice little like covert option to add some nice value to your portfolio. So I may be adding some JP Morgan in addition to Wells and Bank of America soon. And then my number 20 holding is AbbVie, again in the spirit of Altria and J&J. I think this was an undervalued company in 2019 that was offering a nice opportunity to add some dividends and income to my portfolio. So I gladly bought into AbbVie. Okay, number 21, Archer Daniels. You may or may not have heard of them. They're a super boring company. They were also one of the first non-tech stocks I added to my portfolio. And I like them because they're solid and they're boring and they pay a nice dividend. And given at the time that my net worth seemed to disproportionately ebb and flow based on FANG stocks, this was one of the first non-tech stocks I added, and honestly, I just liked the fact that it brought some solid income and value to my portfolio. Here's the other Google stock. Again, you can see a little under 15 grand there. Number 22 is Costco. Not the best value right now, but I think they're a very, very solid business. One of my favorite YouTubers on finance is a guy by the name of Joseph Carlson, the Joseph Carlson Show, and he's a big fan of Costco. If you don't subscribe to his channel, I suggest you do it and watch his video on Costco. He does a great job of breaking down that business. And A, it's just a very solid business that does things the right way here in the US, but B, they are also positioning themselves very nicely for China as well too. So I bought a little chunk of Costco despite the high valuation. Number 23 is LTC. That's just a senior living REIT that I added to my portfolio. Number 24 is Annaly Capital Management. They're a mortgage REIT. I just add them. They pay a very, very high dividend. So I added them. Number 25 is Duke Energy. As of right now, they're my one and only play into the utility space. I'll probably be looking to add more because utilities offer outstanding income. But Duke is one of the best, so they were one of my first plays into utilities. 26 is 3M. Again, they're my one play into industrials, good value, good income, etc. Zoom Communications. They're a little bit of a gamble, a tech play. Bought these. I've bought it at a higher price than where it's at right now, at $76. I bought it closer to the high 80s. So I've lost money on Zoom, but I'm holding on to this one for the time being because I still think they could present some outstanding growth opportunities. QSR, they are Restaurant Brands International. They own Burger King, they own Popeyes, and they own Tim Hortons. I like this one for a bit of a play into the quick serve food industry. But I also like this because they're a Canadian-based company, and it's one of my two small little plays into international companies just to kind of start testing and learning there as well. And then number 29, and the last stock that I have some significant investment into, is Albemarle. They're my one play into mining and materials. They specialize in lithium, which I like that because obviously with the electric vehicles and Tesla and everything else gaining so much traction into our culture, I think that they're going to be a good solid play for energy moving forward. And then I have two more stocks that are at very low amounts right now. Essentially what I've been doing is reinvesting some of my dividends for companies that I don't want to reinvest to. I've been taking the cash on those and then buying these companies. The first one is Tencent, and I'm essentially buying this with non-reinvested dividends in my non-tax sheltered accounts. So my non-IRA rollover IRAs and 401ks. And the reason being is they pay a very small dividend. So I'm counting on more capital appreciation for Tencent. And given that I plan to hold on to this for quite a while, I don't expect a taxable event anytime soon because I'm not going to be selling the stock. And then number 31 is where I've been reinvesting dividends in my tax sheltered accounts because they pay a bit of a higher dividend, and that's Pepsi. Pepsi's not at the best value right now, but I like the company and I want to get more exposure to it, particularly in my tax protected accounts. So I'm using non-reinvested dividends to purchase more or to purchase shares of Pepsi. So that is my portfolio. Curious to know what you all think. And I look forward to doing future videos where I go a little bit deeper onto why I own each of these stocks that I do. And I'm probably going to be selling out of some of these and buying some other equities in the near future that I think present a better opportunity as I continue to learn and get smarter on how I should be managing my portfolio. So thanks a lot for watching the video. I hope you enjoyed it. Have a great day.